Hello everyone, Mark Qureshi here, the founder and creator of Prism Finance. So at Prism, I'm trying to build the fully decentralized currency exchange based on hedge-backed stablecoins. So the vision of Prism is simple. We want to make the USD dollar yield accessible for everyone and every currency. Prism Finance is the first entirely on-chain, autonomous, and decentralized tokenized hedge protocol built on Hedera. It implements productive cash carry (PCC) delta neutral strategy, utilizing HBAR or LSTs like HBAR X as collateral to generate stable yields ranging from around 8 to 15 APY. The protocol's smart contract also aggregates multiple sources of perpetual liquidity, allowing for permissionless rebalancing to optimize yield and manage risk effectively. So basically, at the core of what I'm trying to build Prism Finance on is the autonomous collateralization and risk engine, which basically systematically assesses all relevant risk factors to produce an algorithmic risk score. This on-chain risk engine then enables automated responses to key matrices such as funding rates or collateralization ratios and liquidation thresholds. So it's setting a new benchmark for risk management in Hedera-based DeFi environments. So users can basically hedge their edge bar and earn yield in major global currencies, including US dollar, euros, British pounds, Japanese yen, and eight plus additional currencies. So by acting as a global currency exchange for productive stable currencies backed by hedged edge bar, Prism Finance provides the essential infrastructure for zero slippage forex operations and supports the development of composable finance solution within this decentralized ecosystem. Moving on, the critical problems. So proof of stake requires users to lock up their volatile assets, typically making them face opportunity and volatility cost. So when the user seeks stability, oftentimes they flow through centralized avenues such as Circle's USDC or Tether's USDT. So at Prism, we provide an alternative solution to USDT and USDT, one that is stable, decentralized, and maintains the native yield paid by Hedera staking. So on-chain foreign exchange markets are very heavily USD dominated, while off-chain FX markets, which are traditional finance, are more balanced between different currencies. And I will explain to you this concept later down the slides as well. I'm going to take a little bit of your time to explain what I'm trying to build, and then and then move towards the demo. So existing on-chain solutions face three critical problems. So the ideal collateral problem. So traditional CDPs lock your capital earnings at 0% yield, and then you have the on-chain FX markets are also broken. So on-chain FX is USD skewed and it's hard to rebalance and it's dominated by large LPs, leaving regular users unable to participate. So this is why manual rebalancing comes in. So concentrated liquidity market makers (CLMMs) requires users to actively manage the price ranges and then rebalance the liquidity. Moving on to the third point, which is the liquidity risk itself. So volatile assets combined with debt create constant liquidity anxiety. So the problem, the USD dominates on chain. As you can see by the picture on the top left, USD is dominating on chain with a 171 billion market cap. Then comes euro and then the Singaporean dollar. And on the right, you can see the off chain is more balanced. It has a more balanced split between the currency between euro, USD, JPY, Great British pounds, and then you can see the on chain FX right here. You can see the exchange rate giving 100,000 USDC leads to receiving around 62,000 euros. This is just an example I've taken. And then you can check the off-chain FX as well. For you send exactly $100,000 and you receive a way better rate at getting approximately 91,000. So now, why does this problem exist? So CLMMs require users to constantly rebalance and manage liquidity due to the price fluctuations. So most liquidity tends to be single-sided from one large LP, you can say. So it's not effectively distributed. So users have to work hard, and the protocol ownership is too centralized to a few LPs itself. So traditional CDPs offer no yield on locked collateral as well, and volatile assets create liquidation risk when used as collateral. So as you can see over here, it's correlated, but it's not pegged. And you can see it's not concentrated and it's a single LP here. This is an example of euro I've taken on the top. And then you can see the liquidity range here. It's a pegged asset. You can see it's hyper concentrated and there are multiple LPers. So the current solution is to use CLMMs, but the price fluctuates, right? So there's a trade-off between the range and the rebalancing. So this leads to too much work for the users itself, and only LP end up being the protocol owners itself. So the solution, what we have implemented is to use the stable swap algorithm, which basically shifts the liquidity around the oracle price. So we have set up oracles which feed in live prices. So when the price changes, the users does not need to rebalance them automatically. Now, moving on to the complete suite of solution that we provide. So we provide the solution by utilizing EdgeBar as a growth collateral for on-chain delta neutral positions. This is why we introduced the Prism currencies itself, a one-click hedge primitive for the global financial market. So the currencies are essentially US dollar pegged, and international currencies are backed by a fully tokenized on-chain hedge position as well. In my research, I've discovered from the Federal Reserves, the financial regulators, and other bodies that about more than 70% of the global demand for finance is in the US dollar. So the US dollar basically makes up 59% of global forex reserves, 79% of the global trade settlement, and one third of the global currency bonds are owned by non-US states. So the demand for the US dollar interest is very high, and Prism essentially makes earning US dollar accessible for everyone. So we start with our Prism vault, which basically a user can deposit the HBAR and mint yield generating currencies, earning 15 to 8 to 15 APY. You can also deposit LSTs, which is HBAR X. So you hold these currencies like BUSD, BEuro, or any global currency with delta neutral hedging. Then we have the Prism swap. The Prism swap has a market swap and a currency swap, but our main focus is on the currency swap itself for now. So you can swap between global currencies instantly with zero rebalancing, and I've explained to you how we do that. And of course, there's Oracle-based pricing ensures fair rates on every forex trades. And then we also have the Prism assets. So you can access tokenized real-world assets, including stocks, treasuries, commodities, and even crypto itself to trade P Tesla, P Gold, PT Build, and much more. So the yield generating. So how do we provide this industry leading yields, right? So we do this today with industry leading interest rates itself. So some of the highest across all of crypto. So on average, Prism produces about 2-3x the yield of comparable protocols and significantly outperforms traditional liquid staking tokens. We are able to provide this service with 100% principal protection. So we provide both hard cash fund for principal insurance and 100% restaked insurance funds where users lock up their HBAR in exchange for protocol revenue. So we call this, you can say, offloading the protocol risk itself, means of decentralization, if you will. So now we also have risk management in this. So we have autonomous risk oracles. We have set up Pyth and Chainlink Oracle. As these oracles are not native to Hedera, they do not provide these FX currency prices. So we have set up a backend which pushes these prices every 5 seconds to our smart contracts on Hedera. So we also have an Oracle manager. So we take this information from DEXs and off-chain data and even more on-chain data points to produce the algorithmic risk score, which is then posted on-chain, and it is also verifiable with Merkle proofs. So users can verify at any point in time what the risk to the protocol was, and the protocol can react programmatically to any risk changes. We also have the Prism Preps page where you can trade perpetual futures with up to 10x leverage. Delta neutral hedging protects vault deposits, as I already explained. And then we have the Prism governance page, which is not started yet, but it is in our roadmap to continue this. So as I was trying to say, Prism kind of implements a triple innovative approach. So we have the productive cash carry, the PCC delta neutral strategy. So this utilizes HBAR as growth collateral for on-chain delta neutral positions, and 90% atomic hedging via perpetual futures. This protects against the volatility and dynamic adjustment on every deposit and withdrawal, and the protocol managed short positions also eliminate the liquidation risk. So the key benefit for this is when the HBAR price drops, your short positions gain value, offsetting the collateral loss itself. So users sleep while during the market crashes. And then of course we have the collateral yield generation as well. So around 13% APY on deposited HBAR collateral, and HBAR, it's much better on HBAR X because you have the 10% base and then you have the 3% for the liquid staking as well. So these yields acquire automatically, so there's no minting required, and it's funded by the protocol fees itself by minting, burning, or liquidations. So the key benefit for this part is that your HBAR earns yields while backing synthetic assets, right? So there's capital efficiency plus there's passive income. We've also set up a dual mode architecture. So the vault is depth based, so you mint stablecoins with leverage and you keep the HBAR exposure, while the asset exchange is completely ownership based. So you buy, sell these synthetic assets like P Tesla, Gold, and other RWA tokens. So there's no liquidation risk itself, right, with these assets. And there's also automatic liquidity rebalancing via the Oracle driven pricing, the stable swap algorithm that I just explained for pegged assets. So the key benefit for the stable swap algorithm is that when the price changes, the users do not need to manually rebalance the position, it is handled automatically. So with this whole dual model architecture, so the benefit is that the different assets require different approaches. So stablecoins use a depth model and volatile assets use the ownership model. So all in all, our mission is to empower users to provide liquidity and earn yield without the complexity of traditional market making or the risk of liquidations. Now I'll start with the demo of our live product. So this is our landing page of Prism Finance. You can see it's refactoring global value, yield generating collections on Hedera. You can earn yield on USD, JPY, British Pound with delta neutral hedging. I'll just show you a landing page a little bit. We're powered by Python, Oracle, Chainlink, Hedera, Data Hashgraph. Basically tells you can earn yield on global currency, swap forex instantly, and access tokenized assets. This is where we explain some of our features with Prism Vault, Prism Swap, Prism Assets, and the Prism governance itself. And then we move towards the links and information. Now let's launch the actual app. Okay. So we can connect wallet right here. We can connect with MetaMask right now. I'm still working on the hashback connectivity. Everything in the backend is ready for it, but just some issues were coming up. So let me connect my wallet. And as soon as you connect your wallet, you can actually view your wallet portfolio itself. I've done some testing, so I have these tokens with me. You can actually see your activity as well, what you sold, what you burned, and what you bought. And then you can disconnect your wallet from here. Okay, so let's start with the swap page itself. We have the market swap. The market swap is basically a DEX aggregator that I've built, which aggregates the price from multiple DEXs and gives you the best and optimal route. So, for example, if you want to swap 10 H bar, it'll find the best route. Right now, it's through the best route is through source swap V1, and you can do this throughout with all the tokens you have. As you can see at the top, we also have added a watch list where you can add your tokens, whichever tokens you want. For example, I'll add the source token as my watch list and it'll be added. There's slippage tolerance settings as well. Now let's move on towards the currency tab, which is the more important one. So sorry for the cut there. I forgot to open the price oracle since it's hosted on a backend service. I made it so you can activate it from here. You can stop the oracle from here as well. So it's only used when it's required. This is just a demo feature for testnet. In production, oracles will obviously run continuously. So now let's go to the currency page. You can see we can swap directly the H bar, and you can see the currency exchange rate as well. You can go to the PUSD as well. So let's swap between two different currencies. Let's go with PUSD and P Euro. Let's do a €4 swap. As you can see the price impact. You can see the direct swap. So let's swap this currency. Let's confirm it. As you can see, the currency has been swapped and we get the hashcan link. We can also view it on hashcan, so we can see the result of it transferring. And now I've shown you the swap page. Now I'll go back down to the liquidity pools that we have set up. You can add liquidity to any pool. Let's add it to, we swap USD and Euro. Let's add it to the USD and Euro pool. Let's add, for example, let's add two. Let's add the liquidity. And now this transaction takes around 4 transactions to approve. Since I've not actually implemented the HIP155 atomic implementation, which is relatively new, but once that's implemented with Hashbyte, this will all be done with a single transaction. Now, as you can see, the liquidity is also added, and you can even see the liquidity as right here. And you can see your earned fees. Whenever swaps happen, you can see it's equally distributed among the LP providers. You can also remove your liquidity from here at any time. Now let's move on to the vault page. The vault page, you can see your vault position. This is where you can deposit, mint, and burn and withdraw. Let's deposit around 40 H bar. You can see your max mintable is 5.33 PUSD, depending on the oracle price right now. So let's mint 2. Let's mint less. So we'll deposit and mint. Approve the transaction. As you can see, the delta neutral hedging status is inactive right now. Once this is processed to our contracts, and you can see deposit mint successful, deposit 40 H bar, minted to PSD. You can see the depth of the 2 PSD as well as the collateral right here. And the collateral ratio is 258%, which is healthy. You need a minimum required 150. If it's not 150, the contract itself will reject the transaction. So now you can see your yields and rewards here. So your acquired yield, I had some other positions opened as well, so the yield has accumulated already. But let's claim this yield, and then you can see it reset and start earning as well. Let's confirm. While the yield is claiming, this is the position history where you can see your withdrawal deposits. You can view it on hashcan as well, what you've just done. And then you can see the PUSD amount, the H bar amount, and the ratio of that current deposit as well. As you can see, the yield has been claimed as well. This should pop up here as well. This is the insurance fraud system we have set up right now. This is not implemented yet, so I've just made a simple implementation of it. So it's just a small portion of your collateral contributes to the shared safety net. But I've already explained how the insurance fund works, and that implementation will be done soon. So as you can see over here, as soon as you deposit your collateral, the delta neutral hedging starts. So 90%, which is equivalent to 36 H bar. So it even shows you the hedged profit and loss, and the protection level, which is 90% protected, and your effective collateral. So now whenever you add more collateral, the hedge position will close. It'll give your profit or your loss, and then it'll open a new position with the added amount of collateral. So for example, if I were to deposit another 10 and mint 1 PUSD, confirm it. The collateral itself will increase, the debt itself will also increase, but this closes your hedge, and takes the loss, gives you a profit, and then reopens a new one with the new 90% hedge, which would be 45%. So this is the complete vault page. As you can see, the yield claim and deposit also showed up. Now let's move on to the assets page. So before we actually move on to the assets page, I would like to show the burn and withdraw function we have, where you can burn your tokens and you can see the max withdrawal amount. You can also withdraw, since we minted lower tokens than the actual HBAR equivalent, so we can then also withdraw the remaining collateral. So for example, if I were to remove the 37, we can burn the tokens and withdraw the HBAR. I will show you how the delta neutral hedge changes accordingly. So now let this process. Collateral should change. Depth should also change. Okay, so burn and withdraw. So burn the 3 PUSD and it withdrew. So now we have 0 depth, and you can see the hedging status is also changed accordingly. And if you have external collateral still remaining, the button now activates. Since it knows you have no more tokens left, you can directly just click this and remove the rest of your collateral and close your hedge fund, delta neutral hedging. So now let's move on to the assets page. This is where you can trade synthetic assets like RW assets like Tesla. I'll show you the dropdown: Tesla, Apple, Ethereum, and P Gold. Let's buy 100 H bar worth. So it will show you will receive this much P Tesla token, and the fees also to show. So let's buy the Tesla token. And over here we have the portfolio, the average price you bought the tokens in, and what's the price of the tokens, live price of the tokens, which are updated every 5 to 10 seconds by the Oracle. As you can see, we just bought our Tesla tokens. We refresh our portfolio, and they'll pop up right here with their H bar value. I've already bought many tokens previously when I was testing it. Let's also refresh our, yep, it has refreshed the portfolio. So now you can see the portfolio has also been refreshed. It shows exactly how much we own and all our tokens in profit and loss. You can see this is total invested, and this is the current value. The current value of the asset is the value of the assets that are pulled by the Oracle itself, and shows you the total profit and loss right here. So now let's move on to the preps page. Now the preps page allows you to open long and short of the HBAR token with the USDT liquidity pair. The main concept of the preps page came due to delta neutral hedging, because there was no native preps that I could have used, so I had to create my own order book and my own preps page for this, so we can accommodate the vault with the delta neutral strategy we had. So as you can see here, I've already tested with some open positions. Let's just open another position of 10 HBAR with a 2x, and it's long. As you can see, this over here, your account, it shows your unrealized profit and loss and your margin ratio, total equity, and the available balance. As you can see, the long has been opened here. You can even click it and view more information about it here, the margin health, the liquidation price, and everything else. So let's also just close this position, and you can see the funds and the profits get automatically back into our account. Let's confirm this. You can see the transaction hash as well. Right here, position has been closed, and you can see the result, the trace. These are all the smart contracts we're calling. And now the governance page is not yet completed, but let's move on to one of the more important pages, which is the proof of reserves. The proof of reserves is reserves of our total collateral and total backed HBAR. We have backed these hedged assets by HBAR, so we need to prove that we have these funds and that we can sustain all these transactions. So we can see the proof of reserves here. You can refresh here. You can see the total collateral. This is not just for this user. This is the combination of all the users on the platform. It pulls it through the smart contract, so you can see the collateral ratio as well. You can download the audit report and view the HCS topic. The HCS topic, I'll come to it. So you can see the asset exchange reserves. Now these are the reserves of the individual assets itself. These reserves are filled with an extra amount. So for instance, if the asset were to profit, it would be taken out of these to fulfill those profits. So you can see the reserves are covered by 2x, so these are healthy. And then you can also see the recent attestations. Right now it's not automated. I have to run the attestations, but down the line these attestations will run twice in a day and 12-hour periods, which pushes the collateral, the total collateral, the total debt, the collateral ratio, and the amount of HBAR reserves we have on chain to our HCS topic. As you can see, this is where I initialized it, and then I myself added 7 Hedera. That's why it's showing +7, +7, +7 right here. You can view these directly. This will take you to the same topic I've opened up here. So you can see these are vault reserve attestations. You can see the messages here. It includes the block, the time, the add. This is the amount of HBAR I've added, and before what was the value, and after what is the value. And asset 7 means it's 7 HBAR added to all 7 assets. You can see the rest of the messages as well. Right here, everything is logged on chain, as you can see, and this will be done automatically in a period of 12 hours each day. Now this is also very important to prove and to show that we are solvent and that we are backed and can provide the necessary funds when required. Now moving back to our pitch deck. I've already made this demo video long again, but I really wanted to try to explain to you the concept of what I'm trying to build and what I've accomplished already. Let's just skim through the rest of these slides. The next slide is the market opportunity itself. So there's a fast expanding 150 billion synthetic asset sector supported by massive 7.5 trillion daily FX volumes, and there's obviously a growing RWA adaptation. Key markets include 180 billion stable coins and such and such. So, and also decentralized finance on Hedera is also gaining momentum as users seek a faster and greener and more transparent alternatives to traditional networks. Now, how was Hedera integrated? Apart from what I've mentioned over here, we have 14 plus protection-ready smart contracts, dual Oracle integration with Chainlink and Byte network, delta neutral hedging, of course, a complete front end with real-time monitoring, proof of reserve via the Hedera consensus service, stable swap algorithm to automate rebalancing, and much more. Moving on, the business model itself. So Prism makes money when a user makes money, basically. So given that the delta neutral hedge produces both funding interest and stake interest, it's very lucrative opportunity shared with users equally. So our goal is to grow the perpetual markets on Hedera, increasing the DEX to TVL ratio that has already been growing since launch. So the business model is basically our revenue will come from the vault fees, the asset exchange fees, the swap fees, and the listings, and also the infrastructure as a service as well. I've broken down the pricing strategy, which we have already implemented with our smart contracts, and the customer acquisition as well, where we'll set up a referral incentive to reward users for driving liquidity and engagement. Now, moving on, why Prism stands out, right? So, you can access global markets, transparent and trustless. You can earn trading fees, protected from volatility, the 90% hedging, yield earning collateral, and you basically choose your own risk profile, right? Either from vault or the FX swap, or you can match your own strategy. So we are ahead because we are obviously permissionless. Anyone can participate. We're on chain, so it's fully transparent and verifiable. We have restaked insurance, so it's community backed security, instant risk attestation, so real time risk scoring via HCS. Of course, Hedera native, so transactions are very low, and it has a 3 to 5 second finality. Multi currencies, right? So 12 plus global currencies, not just USD, right? Not just USD. Of course, synthetic assets, access to like stocks, commodities, cryptos, and auto rebalancing, stable swaps, algorithms, and much more. Now, over here, I've explained the traction of the project and the current status and how we are pilot ready. Now, the future roadmap, right? So obviously, as I mentioned, I want to finish implementing the hashback compatibility, so then we can integrate it with batch transactions, the HIP 551. Okay, I think I said 155. So I meant to say it was HIP 551, so we can combine multiple actions into one atomic all or nothing transaction. Then also go towards the multi-set treasury management. We already have a treasury setup, but it's not a 2-3 multi-set. So having that is also one of the important goals. Of course, the Prism staking and governance model, and then moving towards the security audit, the smart contract audits, and the security review, bug bounty, mainnet launch, and the initial liquidity bootstrapping. And I also wanted to mention about the automated liquidation bots, right? The keeper network. So we'll deploy decentralized keepers to monitor the collateralization ratios 24/7. So it automatically liquidates under collateralized positions and rewards the keepers with the protocol fees for maintaining the system health. So now a little bit about myself. The team is just myself. So I built, designed, and pitched the entire project solo for this hackathon. So I'm the developer, the designer, and basically everything else. And lastly, thank you so much for your time. I know this demo video is quite long, so I'm really thankful for your time. So you can explore the demo video. This demo video will be attached in the demo link. You can check out the GitHub repo. It's also attached, and you can reach me anytime at my email. And the live website link has been also attached. And lastly, I would like to end with saying that Prism Finance is building the foundation for decentralized global markets, and this is just the beginning. Thank you so much.